Thank you for checking out Real Talk Personal Finance. Shit's about to get real. Cash Flow King with you today. And in today's episode, can renting build wealth? Thanks so much for tuning into the show. As always, we really appreciate it. Any feedback or suggestions for the show, feel free to reach out via email. You can send us a note to realtalkpersonalfinance@gmail.com. You can also text the show by clicking on the link in your show notes, and that will come right to us, and we will respond in audio format on an upcoming show. If you haven't already done so and you feel like we've earned it, we would really appreciate a 5-star rating and review. You can do that in your podcast player of choice. And again, we would really appreciate it. Also, feel free to share the show with a friend, family member, coworker, your dog walker, your dry cleaner, your babysitter, whomever, and spread the word. We don't do really any marketing for the show, and so we kind of rely on our listeners to help us out with that part. We also, I don't think I've really mentioned this all that much before, not to say that we'll never do this, but we also don't run any ads on this show because, well, at least as a podcast listener, when I listen to other shows, it's really fucking annoying to have to fast forward and skip through, and then I fast forwarded too far, so then I have to rewind it. Didn't want to do that. So if you appreciate the show and you like what you hear and you think we do a good job and you want to benefit from some of the additional benefits of becoming a premium subscriber, feel free to consider becoming a premium subscriber of the show. That's part of how we continue to run the show and host the show and those sorts of things. So we would appreciate that as well as a little thank you, because again, we currently do not run any ads on the show. Not to say that we never will, but that's not the plan as of right now. So we are trying to actively continue to build out our benefits for our premium subscribers, but also our premium subscriber base. So if you have the resources to be able to do so and you enjoy the show, we would appreciate you becoming premium. You can do that by clicking on the link in the show notes that says click here to become a premium subscriber today, and you can read more about it. Okay, well, let's jump in. So how many of you have heard, yeah, like I can see a show of fucking hands, right? How many of you have heard that your home is your biggest investment, or your home is your biggest asset, or something to that effect, right? We've probably all heard that before at some time. And while for some folks that can be true, my personal opinion on this one is you're probably in fucking trouble if your house is your biggest asset. I know some people have very expensive homes, and that's fine. Others may have, lower cost homes, also fine. But if that is your biggest financial asset, then I think you could be in trouble, which kind of leads its way into today's show. I almost titled the show, Does Renting Build Wealth? But I think that's a pretty simple answer, and the answer is no. Just by mere renting something, renting a place, renting an apartment, renting a condo, whatever the case might be, that in and of itself doesn't build wealth. However, oftentimes the monthly cost, not always, but oftentimes the all-in true monthly cost of renting can allow you to invest additional resources and potentially help you build wealth. And that's really what we're going to take a look at today. So I have a post that I'm going to read that came from Reddit on the personal finance Reddit or subreddit. And then with the help of ChatGPT, I kind of have some other bullet points that I want to go over and really take a look at this because, and I think I've mentioned this on other shows in passing briefly, but there are some people, some fairly famous and financially successful people that will tell you, and again, I'm not saying to do this or not to do this. We, as always, don't give any advice on the show, but this is for entertainment and educational purposes only. But they'll tell you, rent to your primary residence and invest the difference, right? Kind of like the whole buy term, invest the difference thing when you talk about life insurance. But is that really the answer? And spoiler alert, I think the short answer is it depends. For some people, it might be. And for other people, maybe not. So let's go through and explore that. And I came across this post, and I thought it was interesting because I think it describes somebody that actually potentially could benefit from renting and simply investing the difference. So I'm going to read this post. I screenshotted this from Reddit, okay? So this says, the title is, I don't want to own a house. Am I making a financial mistake by not owning one? And then their post goes on as follows. They said, I live in Houston, Texas, where housing is still relatively affordable for a large metro area and have enough saved for a down payment. I have around $115,000 in cash equivalent savings, and then in parentheses they put checking, high yield savings account, and CDs. And modest houses around here can be found in the 200s, the 200,000 range. The thing is that I just can't find a justification for owning my own place other than as an investment and to protect myself from future rent increases. I'm single, childless, 42 years old, own few possessions, and don't need a lot of space. The suburban American lifestyle has just never appealed to me, and I've never really wanted to own a house. I don't like the idea of committing to living in one place for a long time, owing money for decades, and I'm not handy or good at fixing things. It just feels like having a chain around your neck. I'm currently contributing the maximum to my employer 401k plan and have around $150K in it, which is behind, I'll admit. I graduated college in my 30s and had a late start. Student loans are paid off and 100% debt-free, though. If I keep contributing as much as possible to my 401k, is this enough to make up the difference and keep up with my peers if I'm not building equity in a house? So I think this kind of sets the stage for, and this is just one example of likely many, but an individual who really truly, based on their question and their post, doesn't sound like they want to own a home. And I would say at first glance, like, yes, that's fine. Like, no, you're not making a financial mistake necessarily by not owning a home. Now, if you went, study after study and looked at the numbers and took a sample, right, a large sample size and said, okay, we are going to go to, wherever. You can pick geographies across the United States, for example, and say, we're going to take a survey and what is the net worth of the average renter or the average tenant, the average renter versus the net worth of the average homeowner. And you can do all these sorts of comparisons. And yes, it's probably no surprise that generally speaking, you would likely find that people that own homes typically will have higher net worths than people that rent. But I don't think that's necessarily true across the board. And I think this person is a perfect example of somebody who owning a home just doesn't make sense for their situation, and I don't think there's anything wrong with that. I mean, if you think about the freedom and the flexibility and everything that this person would have by continuing down the path of renting, I think they'd be just fine. So I'm going to read a couple of responses that they got on Reddit. One person says to them, it's perfectly fine not to own a house. You can invest the difference between renting and ownership and costs associated with ownership to hedge against the increase in rent over time. Real estate is nice. Whoops, where did it go? Real estate is nice, but there are a lot of other good investment vehicles. So that's what one person said to him. Somebody else said, for long-term financial wealth building, buying a home and staying in it will absolutely put you far ahead of people who rent for life. Reddit loves to parrot the quote, rent is just as good as home ownership line. Rent has its plus points, but for wealth building, if you are not going to be moving a lot, buying a home is the way to go. People who own their homes pre-2022 are sitting right now with $1,500 a month mortgages, with $500 of that going to principal. So their true monthly cost is only $1,000 a month to live in their own home. People today are barely able to rent an apartment for $1,500 a month, and all of that is lost money. So their monthly cost is $1,500 a month. So the housing owner is $500 a month better off than the renter. Now factor in leverage depreciation of the property. You bought the property with 10 to 20% down. So your $20,000 deposit on the $200,000 home, which might appreciate 5% per year, will boost your net worth by about $10,000 a year. So right now, the renter is down 12 months times $1,500, which is negative $18,000 a year. And the homeowner is down 12 months times $1,000 equals negative $12,000 plus appreciation of $10,000, so negative $2,000 a year. People on Reddit always blow the maintenance costs of home ownership way out of proportion. In fact, being a homeowner over the past 10 years, I've had about $200,000 in appreciation on my two homes and only about $15,000 in repair costs. And they just keep going on and on and on. So Again, a different perspective, right? Not to say that one's good, bad, right, or wrong, but I definitely see both sides. So there's a lot of things that, somebody would need to consider. But I think at the end of the day, the answer is that yes, you can build wealth by simply renting and investing the difference if you're disciplined, right? And so if we look at some different considerations, let's talk this through. So one of them is going to be if you're renting versus, owning a home, you're going to have lower initial costs, right? So if you're renting, you might have to put last month's rent and a security deposit, but that's probably pales in comparison to the amount of the down payment that somebody would need to put if they were going to buy a home. So when you're renting, you avoid that large upfront cost of the down payment, which ostensibly could be invested instead, right? Because you still have that capital. And this, again, probably assumes that you are renting by choice and not by necessity, right? Because if you didn't have a down payment to begin with, well, then maybe you don't really have all that much of a choice and renting becomes your option because your finances are just in, not as great of a shape. But we'll assume that we're talking about the dude that comes on Reddit and says, hey, I have some money, I have some savings, I have some retirement, like here's my situation, fuck owning a home, am I screwing this up, right? Like let's pretend that they have some financial resources to work with and they're just trying to make that decision. So that's one consideration, lower initial costs in the form of down payment. Also, you're going to have lower maintenance costs because you're not going to have to, keep up with the maintenance and repairs and whatnot. That's typically going to be the responsibility of the landlord or the property owner. So that's the first thing. Number two, flexibility in investing in the form of diversification. So if you're not going to tie up a bunch of money in the home itself in the form of a down payment, well, now you have the ability to take that money and put it into something else, right? So you can put it into whatever you want. You can put it into the market. You can put it into real estate investments. You can put it into whatever you want that potentially could provide higher returns than simply the appreciation potential on a home. And going back to that person that wrote that response about, home prices typically appreciate by 5% a year, yada, yada, yada. So you're gaining $10,000 a year in equity. As we've talked about on the show before, that's the first thing to go if and when the market turns. And we've all seen that happen if we think back not too long ago. And so that's not necessarily a bird in the hand, right? That's not a guaranteed thing that's going to happen. The likelihood that happens over long periods of time, I don't know if the number is exactly 5%, for example, but yes, generally speaking, housing prices will go up. Generally speaking, people will build equity both through price appreciation and equity growth through the principal pay down on the mortgage. Like all those things, that's fine, but that's not going to happen 100% of the time. So while I understand their point, I don't necessarily think that that's necessarily a fair apples to apples comparison against renting, but I see where they were going with that. All right, so we have that. Next, we would think about liquidity and accessibility, right? So if you have money that's actually invested, let's say you put it in the market, for example, there's always going to be risk associated with that, right? But you presumably would have access and liquidity to those funds. If you needed to tap into it, you could tap into it. Now, of course, if markets go down, yes, you have the potential that you could have, investment losses there. And so that money might not always be there 100% of the time, or it might not always be 100% of the value that you started with. But that's something you know and should know going into it in the first place. The other thing is market risk, right? If the housing market declines, like I just mentioned, then you have the equity in the home, if you have any, is basically going to be the first thing to go. Depending on where you have your assets spread, if you were to invest the money instead, that may or may not be the case. Now, chances are, if the housing market takes a shit and you have your money in, say, the stock market, for example, like there's a very high likelihood that your portfolio is also going to take a shit, right? But that's not necessarily the case if you had your money in other types of investments. Maybe you had your money in some sort of deposit product or, CDs, money market, cash and cash equivalent. I would argue that's not really the best place for long-term investments per se, but it is an option. So it really just depends on where you have the money, but that's another thing to keep in mind. Flexibility from a location standpoint, right? So you can, whether it's because of a job or career change or anything along those lines, if somebody's renting, they're going to be able to move a lot more easily and just up and go without having to worry about selling a house, right? Because that's a pain in the ass. Just ask Cube Crusher. So if something happens and you need to just finish out a lease or potentially pay a little bit of a penalty to get out of the lease early, something like that, and be able to just up and go and not have to worry about selling a property that could take several months, that's also going to bode well for the renter. So I think the biggest thing for most people when we talk about, can renting build wealth, I think that if there is a difference, and we'll go through another example here in a few minutes, if there is a difference in the monthly cost of renting versus owning, right? Let's say renting is quote unquote cheaper. That person has to be disciplined enough to actually take the funds and do something productive with those funds. Otherwise, I don't think you can make an argument that renting can build wealth, right? If you just squander that money away. So that's tough. So let's look at an example. This is from ChatGPT. So the example they provide says, let's say you're considering buying a home for $500,000 with a 20% down payment. So that's $100,000. Instead of buying, you decide to rent a comparable property for $2,500 per month. The mortgage, property taxes, and maintenance on the home would have cost you $3,500 per month. So by renting, you save $1,000 per month, plus you retain the $100,000 down payment. If you invest the $100,000 at a 7% annual return and continue to invest the $1,000 per month in a diversified portfolio over 30 years, you could potentially grow that investment significantly, potentially outperforming the equity you would build in the home depending on market conditions. So that's just an example of essentially tying it all together in terms of what we were talking about, of being disciplined and doing something else with the money, doing something else productive with the money. So the conclusion that they give is basically that building wealth by renting and investing, the difference, is a viable strategy, especially in high-cost housing markets. And I would agree with that. I think most people, their number one goal in life, and this could be different for everybody, but chances are if you're out in California, your number one goal in life is probably not to buy and own a primary residence, right? You're probably renting. You're probably fine with renting. You could probably come on here and tell us all how, dude, if I bought a fucking $1 or $1.5 or $2 million, for on a primary residence, I'm going to buy a shack in a bad part of town, versus I could rent for, whatever the number is, X thousand dollars per month, and be way better off financially from a monthly cost standpoint, and rent a way nicer place and have all the benefits of, flexibility and able to just kind of up and move, on a whim if needed, things along those lines. And I have the ability to do what we're talking about, which is take those financial resources and redeploy them elsewhere, and have the opportunity to build wealth that way. And there's a lot of people that do that. Let's see. However, it requires careful financial planning, disciplined investing, and a long-term outlook. This strategy might not be the best fit for everyone, especially if you value the stability, potential appreciation, and personal satisfaction that can come with home ownership. And so that's the other thing. I think for folks, it's really a lifestyle decision more than anything. Some people want to be able to live where they want to live and not have to worry about getting a notice that says, hey, sorry, you have 30 days to move out, pack your shit. Right? Maybe they want to be in a certain school district for their kids if they have children. Maybe they want to be able to hang shit on the walls and not have a fucking landlord or property owner or property management company say, sorry, you can't do that. Right? Maybe they want to put an addition on their home, or they want to paint the walls fucking yellow, right? Or whatever. Like, there's a whole host of reasons from a lifestyle standpoint that somebody may want to own a home. We own a home here, right? And could we rent? Sure. Now, based on the timing of, when the home was built and the geographical location and those sorts of things and the time frame that all that happened and the interest rates at the time and yada, 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 the monthly costs, even factoring in things like maintenance and upkeep and whatnot, are probably actually significantly less, or at least on par with what we would be paying in rent, depending on where you want it to go. But it is a lifestyle decision. I don't think of this home, on the one hand, you could make an argument that it is an asset and it generally does appreciate in value, and it's definitely gone up in value, and there's definitely equity growth that happens and all those sorts of things. But it's nowhere near our largest financial asset. As I mentioned at the beginning of the show, we'd probably be in real fucking big trouble if it were. And also, it's a lifestyle decision. We're living where we want to live, and no one's going to make us move, right? Unless we don't pay our property taxes and our house gets sold, or we don't make the mortgage payment and our house gets foreclosed, right? But if you don't make your rent payment, you're probably getting evicted. You know what I mean? So you're going to have that monthly cost no matter what. But it is absolutely 100% a lifestyle decision, and it's an expense, and that's okay because it's by choice. But I didn't, get the house because I thought, oh, this is going to be great from a financial return standpoint. Yes, there's people that buy in certain areas. I mentioned California a few minutes ago, not to pick on you guys out there in California, but, maybe you bought a home in California back in the day or even, several years ago, and all of a sudden the housing market took off and the appreciation was wild, and you said, fuck it, I'm selling it, right? I'm going to take the gains and go move somewhere else or whatever. Not to say you can't do well financially from home ownership, but I would not bank on that as a strategy for long-term wealth building. Again, I think if you looked at the numbers, and I'm sure there's studies out there that do this, between homeowners and renters, that homeowners are typically going to have stronger balance sheets, higher net worth amounts, those sorts of things. But I would not look at your primary residence as an investment unless, you're doing the proverbial house hack where you're living in one side, let's say you had a duplex and you're renting out the other side or something like that. Okay, fine. But if you exclusively occupy 100% of your primary residence and you are responsible, or you and your spouse or significant other or family members or whomever are responsible collectively for, 100% of the financial obligation, then it's really an expense to you. It's money coming, as Robert Kiyosaki would say, it's money coming out of your pocket every month, right? He would argue that your home as a primary residence is a liability, and we could talk about that all day. But the point being that I do think in the right circumstances for the right individuals, renting can make sense, especially in higher cost of living areas, maybe big metro areas, way out on the West Coast or even up on the East Coast. You could make an argument that you could rent and then be disciplined and invest the difference and come out just fine. But there's some people that, for whatever reason, whether it's just lifestyle choice or that's how they were raised or brought up, or what's been kind of put in their head about you need to quote unquote live the American dream and own a home in the suburbs with the white picket fence and the 2.5 kids and all that bullshit, right? And some people still subscribe to that. I'm not saying you should or shouldn't. That's completely your decision, your life, your call. I'm just saying that I think there's been more and more focus that's been brought to the fact that you don't have to own a home. At the same time, though, with all that said, it is also an interesting time because rents generally do go up over time. And that's one part of your costs that you really can't lock in. If you think about it, if somebody takes out a mortgage on a home, assuming it's a fixed rate mortgage, your principal and interest portion of that payment are going to be fixed for the life of the loan. Let's say you escrow for property taxes and insurance. That can fluctuate and go up. And generally speaking, insurance premiums and property taxes will slowly go up over time. That is true. However, if you're renting, then presumably your rent payment is going to have to cover those increasing property taxes and insurance for the property owner. And presumably they're passing that along to you over time in the form of increased rents as their cost goes up. And then there's typically, hopefully, going to be, for them a little bit of a markup for positive cash flow where they're making some profit there. So your costs as a renter and homeowner, either way, are going to go up. But the biggest appeal, and I don't think this is a surprise to anybody, but typically the largest portion of your mortgage payment, like that person was saying on Reddit, and they are correct, is the principal and interest component will remain fixed and steady. So that's something that brings a lot of people a lot of peace of mind, knowing that that portion is not going to go up. And there are a lot of people today, as rents have risen, that cannot afford to rent the place that they would like to rent. Maybe they have to live in a different neighborhood or a different part of town that they don't particularly care for, or maybe they have to move in with roommates or move back home with family or whatever the case might be in order to afford wherever it is that they're trying to live, given the state of the way things are right now. So it's a tough one, right? The renting versus buying decision is definitely a tough one, and it's going to be different for different people at different points in your life, depending on your lifestyle and your preferences and your financial condition and all those sorts of things. You kind of have to put everything in a blender and then come out with whatever is the best decision for you. But I do think that it is possible to rent and still build wealth, but I do think at the same time it would be more difficult to do that. And I even look at some of the rents that some of our tenants pay, and we talk about it every now and then. I don't think we have a single rental property that rents for less than our mortgage. And we don't, we have a pretty, I don't want to say average house, but it's a basic house. It's nothing overly fancy, but it's decent, it's relatively new, and rents have just come up over time. But also we've seen a pretty big increase in property insurance. We've seen increases in property taxes and those sorts of things. So it's not like, oh, it's the greedy landlords and property owners. It's like, no, there's rising costs that go along with that. And to still maintain your margin, you're going to have to keep your rents at a certain level if you want to remain cash flow positive and profitable. So I see it from all sides, right? As I mentioned, I used to be a renter myself, and I know that rents there, if I had stayed where I was in the Northeast, and I do go back and look at it every now and again, and they're significantly higher, obviously, than they were way back then. So would I have been better off back then buying a home and with that appreciation? Well, maybe not, because again, you have to look at all the other financial considerations and costs, right? What would the down payment have been? What was your monthly outlay going to be? What were the maintenance costs? What were those going to be? And you have to factor everything into that. When these tenants have something go wrong. I had one recently where the fucking motion lights over the garage, which I didn't even know we had. I don't think we installed them. I think that previous residents installed them, but they called in for something like that, and the property management company sent out their techs to go, and we ended up getting a bill for that. Now I could bitch about it and squawk about it and say that's their responsibility. They can change a fucking light bulb, but you know what? I'm not going to do that. I'm just going to take one for the team. So there are some costs that the property owner is going to incur, and we get an episode coming up about. Spoiler alert, something really interesting that happened that, cost us a little bit of money, which we'll get into on that episode. But there's things that are going to happen. So I'm getting a little long-winded here, but I guess the point is you have to figure out what works for you, just like anything in life. And that answer could change over time. You might be renting today and own a home tomorrow, or vice versa. And you just need to make sure you're looking at all the different considerations. But I guess my main point and takeaway with today's episode is that yes, you can build wealth while you're renting. Renting in and of itself is not going to build wealth, so you need to take additional steps. Renting may or may not be the right choice for you, but there's no shame in not owning a primary residence. And I think that's where a lot of people feel like they're being judged if, like I've had clients before where we're going through some information and on an intake, for example, we're going through like an investor profile or just basic client information, and we ask them if they own or if they rent. And every now and then people are renting and they feel like they need to fucking justify it. Like, well, yeah, I'm renting right now, but we're planning on buying a place in the next 2 years. It's like, that's great conversation and whatever, but like they automatically feel the need to have to explain sometimes why they're renting. It seems like they feel like they need to explain why they don't own. And I think just here in the US, there's this stigma, or at least historically there has been, about people that rent. And I think that's slowly starting to go away. And I just thought it would be interesting to shine some light on that for today's episode. Just the fact that, in some situations, it actually might be a net positive for you to rent and build wealth, investing the difference if it fits your goals and your lifestyle and your desires. So hopefully that was helpful. We appreciate you tuning in. Consider becoming premium. Leave us a 5-star rating or review if you feel like we've earned it. And please feel free to share the show with anybody you feel that would benefit from listening. If you have any feedback, realtalkpersonalfinance@gmail.com, or click the link in the description to text the show. That's also where you can find out how to become premium. Thanks again. Hopefully you enjoyed today's ad-free show. We will see you in the next episode.
Check the mic and make sure it sound right, boys.